Good morning, everyone. Welcome to our Friday morning trading room. I forget, is today a rabbit hole Friday or a regular Friday? A lot of times on Fridays, we're going to take the time and mess with your mind a bit. Looks like the day is off to a good start. Maybe we should just trade today. I'll go over a couple of things because Aspen mentioned the other day about, or I think he mentioned about profit targets. Taking a look here at the daily NASDAQ, you can see the market still hard up against this 8,000 zone, still rejecting a little bit. Volume is up on such a tiny little bar. Well, maybe we'll talk about volume a little bit today, because nothing in the market happens without volume. So volume is up on a tiny little bar, but volume, as you know, is a relative indicator. What that means is that big bars, where's a big bar? Big bars should have big volume. Small bars should have small volume. But when small bars all of a sudden have big volume, or big bars have small volume, like you look at this bar down here, a little bit of volume, but look at the bar. It's this green bar right here. And that tells you something's not quite right. There's no participation for the buyers. Now, typically what you want to see is when the market breaches a support or resistance area, you want to see an increase in volume. That will tell you which way the market may be leaning. Now, you can see it's not necessarily instantaneous, but the fact that the sellers were a little bit stronger here kind of put the kibosh on the buyers. You can see the whole time the buyers are trying to rally. Oops, volume decreasing, generally speaking, through that whole period. And then when prices go down, volume goes up again. Prices go up, volume goes down. What does that tell you? It tells me that there's not a whole lot of support for the buyers at the moment. And unless we see a breakout above this 8,000 level and an increase in volume, so this trend begins to reverse, any breakout will be short-lived. So let's take a look. Oh, here, before we leave the time-based chart, let's take a look at this on a shorter time frame. I probably picked a bad Friday to do a rabbit hole Friday. Oh yeah, big bar here to start. What you're going to notice with your volume on your intraday chart is volume will always be higher out of the open, and that should make sense. That's where, when everybody gets interested, everybody does their trading, and then volume tends to taper off during the afternoon session. And then, well, yesterday this was an extreme. We see a big rally going into the close. So a lot of volume there. So when this happens on your intraday chart, you can't really compare, well, I guess you can't really compare, you know, a huge volume spike like this, but the principle compared it to, you know, volume spikes like this, because the volume will never be this high again. But the principle remains the same in that big volume should be on big bars, small volume should be on small bars. So long as that relationship holds, you can probably say, well, if I get a big bar and big volume, that shows that there's a reasonable amount of support for that kind of move. The problem with volume, as I've mentioned before, is because it's a histogram, because it's a relative type indicator, it's a little bit more difficult to discern. So what I tend to do is I kind of look at these periods like this. Okay, price is going down. Is volume going up or going down? Well, if I draw it from here to here, it looks like it's going down. But if I draw it from here to here, you could make the case that it's actually going up. So how does that help me, you say? Well, what I'll do sometimes is I'll look at volume spikes. So I'll consider them relative to each other. So here's a spike in volume, and that's kind of associated with the low. Here is a kind of the low point in volume, and that's associated with the high. Another spike in volume, and it looks like that's associated with this low. Another low in volume, and that's associated with these highs. Now, all of a sudden, it looks like we're getting a little bit of a breach. It didn't breach, but it looks like a breach. So we got this little high again, and now all of a sudden prices are on the move. So rather than try to compare everything to this great big spike or even these great big spikes back here, when I'm looking at volume, I'm looking at the more immediate going on relative to what has been happening. I know, it's confusing. That's why a lot of people don't follow volume. And yet, as I said, nothing happens in the marketplace without volume. We're going to take a look here in a moment at the DTS tools. Sorry, I can't multitask. All right, so we'll put that away. Wow, very, very nice rally out of the opening buzzer. Boom, up she goes. Just for amusement, let's throw a volume histogram on here. There we go, that'll do. Hey, Ray Burke in the room here this morning. Ray is going to host the trading room next week. I'll be in the room for a little bit on Monday morning, help Ray kick things off. Yeah, things look a little bit more confusing on when you break it down by the Renko bars, doesn't it? So let's see, if I pay attention to the volume, the spikes in volume, I have one here, and that ties in right about there. Yeah, I'm afraid volume's not going to be the best indicator that I can see usually what I do when I'm looking at new indicators and stuff is this telling me something that I don't know? Well, I suppose you could say, no, never mind. I'm not even going to mention it. Okay, let's get that out of there. We'll do a different type indicator on the next Rabbit Hole Friday. I think today we may just trade. Oh, Ray, your fan club is saying Ray is back. Awesome. I missed Ray. Well, there you go. Ray's stacking the deck. Tell your friends. Ray Burke back in town. All right. Well, the market, in spite of that big rally, kind of put the brakes on. Aspen was asking yesterday a little bit about measured moves. And while we're waiting for the next signal, let me go over that again. A measured move is just a market concept. And the way they put it, the way analysts look at it is they say, okay, if the market makes a move and then a pullback, this move will be repeated. And so then they use the original move and they stack it to forecast where the profit target will be. And I'll leave it to you to find these for yourself, but you'll be amazed at how often that works. I almost think it's a little bit of a self-fulfilling prophecy of sorts. But that is not the only way to determine a profit target. No doubt you have heard of risk reward. Let me show you the proper way to do risk reward. And it's not the way that most of you guys think. Oh, by the way, let's throw a just in case order to buy up here while I explain this. All right, so we have an obvious breach of a resistance area. The market, after breaching, has made a retest. The old way of doing risk reward ratios is everybody says, well, when you take a trade, you have to get at least 2 or 3 times reward relative to your risk. Great idea. Works fantastic on paper. But if any of you have ever tried to apply it to real life trading, you find that, well, the market didn't read the same textbook. When I hear people spout on about risk reward ratios and, you know, you need a 3-to-1 or 2-to-1, it really makes me wonder whether they're making any money trading. And let me show you why. What most traders will do is they will say, okay, here's my signal and I'm going to enter here and I'm going to cover the trade down here, and therefore I need to make 3 times as much money as I am risking, right? Well, that's all well and good. Problem is, how do you know where the market's going to go? How do you know how much higher the market is going to go from here if it breaks out? Well, the obvious answer is you don't. Very often, the best looking setups will do something like this. They'll go up, bring you in, and then they'll go, right? Whereas the worst looking setups often have the exact opposite effect. This looks like a horrible setup, and yet, boom, up they go. All right, so how can you figure out where the market might go? we have an obvious breach of resistance. We know that the market will tend to make two moves in the direction of the breakout. So there is a very good chance that the market will try to continue higher from here. How much do we have at risk? Well, the risk amount, this is how a professional looks at it, is the risk amount is the amount of the pullback after the breakout. Currently, this is the risk amount. If the market pulls any deeper, the risk amount will increase. Therefore, when a professional talks about risk reward, they're not talking about the same thing that your textbook is. When they say they want a 2-to-1 reward, that's 1. That's, come back here. That's 2. Therefore, their profit target will be right here. Now that is relative to the amount of risk. Now it's a different way of looking at risk. Now we'll leave this in play today. We'll see how this works out. And you can do it on a smaller scale as well. You can do the same thing, say, on your Raptor chart. You don't have to have the great big eagle chart. In fact, I may have to build another chart so I can demonstrate this. One moment, please. Oops. Okay. So, all right, here now the Raptor chart. Oh. I wonder, is this going to, oh, I bet you it took all my orders off. Oh, it did too. Son of a gun. Oh, got it in just in time. Okay, so my risk now is down here, right? That's my risk amount. Gonna have to let this trade play out, and then I will demonstrate on a shorter time frame. We have made our swing target, by the way. And there will be some traders who will actually be looking to make that third square and try to get the market up here back to 8,000. Those are the kinds of traders they're going to be holding on all day to try to get that trade to work. Personally, I don't mind having a shorter time frame point of view. If you're doing this type of trade, you need to be very, very liberal with your stops as well. You can't be rolling your stops too quickly. And I don't know, for me personally, that makes me very nervous. When I've got, well, currently we have $100 on the table, but certainly when I start to get $200 or $300 in an open trade, I start to get a little bit nervous. There is another methodology, and it's a little bit different. It goes from breakout to breakout. So I need to kind of eyeball this now. So we go from breakout to breakout. Close enough. Now, is there a way to rotate that? It's easier to do on a piece of paper. And what you would do is you would rotate this line vertically. I don't know how I can do that. I'm not sure I have that option. Just looking at these tools here, I'm surprised how many we've already done. We did all the Fibonacci's. I don't know if we ever did Andrew's pitchfork or not. I don't think we've done the Gann fan. But here's one, if you can figure out a way to rotate that line, you can go from breakout to breakout, and you can make this line vertical. I'm not quite sure how I would do that. Let's see if I do a square. Does a square allow me to rotate? No. The properties will not do anything for me. No. It's one of those things we used to do with paper charts. What? You say paper? Yes, I used to get my charts in the mail. Oh, Scott, why didn't I think of that? Scott says, use a ruler, measure the distance. Thank goodness you're here, Scott. I don't know why I didn't figure that one out. Yes, of course, you can use a ruler. You can use a piece of paper, draw a couple lines on it. All right, here, hold on. Breakout to breakout. I better not get pen mark on my monitor. I will not be happy with you, Scott. Okay. Oh, look at that. It's almost the same. If we were doing a 3-to-1, it would certainly be in line with a 3-to-1, I think. If I did another little shadow box down here. Look at that. Right on the money. So there you go. You have 3 ways. Scott says, no, man. The ruler and the drawing tools. Yes, okay. I gotcha. A piece of paper works too. Now, obviously, if this is your objective, like I was saying, you have to take a much broader point of view. Typically, you know, we're pushing like $150 in open profit here. I would gladly take that. In fact, for the sake of the room, we'll say I took it. Okay, now we'll see how we play out here. Stop rolling when you're trying to do this kind of thing. You really need to hold your stops. You can roll your stops when you breach the last swing high, and you would roll your stop below the last swing low. In this case, the last swing low is actually a little better than break even, so that's good. Yeah, Scott says you need coffee. It is so true. It is still very early here. Okay, so we've breached. I can roll my stop now below that swing low right there. We've made our eagle target, hooray, which you can see would have been a little one-to-one type trade. And obviously, this will work better when the market is trending. Now that we've hit our eagle target, look at how the market flinches. This is why we have our high probability profit targets. And when you guys have Ray in the room next week, you can quiz him about how we came up with those profit targets. No, joking aside, I think I had more to do with the profit targets. Ray had a lot to do with the brick sizes and testing. Ray is one of the fathers of DTS and the Raptor. I know, that sounded weird, didn't it? Yeah, that's right, Phil. You'll get to hear Ray do his push. He's going to have to do it for me on Monday. Cracks me up every time. All right, so we got a one-to-one. Let's see if they give us that next rally. Now I'm obviously looking here for the market to breach 79.70, so I can bring my stops up some more. This is one advantage among several that you have trading a mean Renko chart over a time-based chart. So let me bring back the 5-minute chart, which is kind of the staple for day traders. And so we're long from 58, somewhere around here. You can see that your stops would be right here on a time-based chart. You would not even have the opportunity to roll your stops yet to break even. Now, on the one hand, I suppose that's a good thing because it gives you a lot more staying power. But on the other hand, you got a whack of money at risk there. It looks like a good 60 ticks, which, is likely out of reach for most. Okay, still kissing our Eagle profit target. Get a second chance at it if you didn't take it before. Now might be a good time. Okay, we pushed through that. I can roll my stops a little bit. Now, I should point out, if you're going to use this type of strategy, you don't want to be the last man standing. You don't want to be the guy here holding to, 79, 82 and a quarter, because that is exactly 2 to 1. No, because what's going to happen is traders are going to start to bail, right? They're going to start to bail anywhere from half to 3/4 of the way to the profit target. So if you're smart, you should probably do the same. So whereas the true profit target is way up there, 79.80 is probably going to have a little bit of an influence. It might be a good idea to ditch before you get that high. Really strong rally for a Friday. Oh, don't be looking back just yet. Thing to remember as well, you know how I always tell you, your stop loss is not a loss until it gets hit. Well, your profit target isn't a profit until it gets hit either. We've had plenty of opportunities to get our Eagle target out of this trade. If the market swings one more time here, it will probably push up to that 79, 80, 82 zone. And I should be able to get my 2 to 1 profit objective. Of course, if it fails at this point, it'll tag me out and probably make a bit of a deeper retest. How do I know? Well, again, markets have a tendency to go between support and resistance. So they're going to test and retest zones until one side gives. Come on, give me that little break. You stinkers. Trying to make a point here. Out of curiosity, does the 79.82 zone coincide with a resistance line? Oh, look at that. Support and resistance lines forecasting secondary resistance at 79.85. Things slowing a little bit. The buyers taking their foot off the gas pedal. As I mentioned, though, if you were trading a time-based chart, your stops would still be, well, way down here somewhere. You would not have rolled your stops yet. And I don't know about you, but we've got $200 in open profit, another $350, $400 in risk. That's $600 on the table. It's a little bit rich for me. All right, well, we made a teeny tiny breach. Usually I like to see the market close above there before I roll stops. If you're a little bit more anxious, you can certainly roll up here. Trading a very personal business. You know, I can show you what I like to do. Ray's going to show you what he likes to do. But at the end of the day, hey folks, it's your money. You do whatever you want to do. You get to take all the credit and you get to take all the blame. Who wouldn't want to be a trader? Hey, can I sell it or what? Now, as we get closer to my profit objective and as we get closer toward that second zone where we're going to get that 2-to-1, I would get more aggressive with my stops. So if this bar finishes bullish, I'm going to start to trail below anything with a tail to it. There we go. Or I can even go bar for bar. Let's go bar for bar. Drum roll. Come on, get up there. Oh, they're piling on now. Look at that. They're kicking them down already. See, I told you, you don't want to be the last guy out. You don't want to be the guy holding the door. Come on, get up there. Hooray. Okay, well, that was a nice little trade. Thanks, Scott. Scott giving me kudos on the trade there. Okay, so I took profit a little bit early. It looks like it's going to sneak up here to do our 2-to-1. See, they're getting a little bit more pressure as traders looking maybe to exit. Certainly, if we get up here to 79.95, a lot of the traders are going to recognize that as a 3-to-1, and they're going to say, see you later. You know, it helps when the market is in a trending mood. When the market's trending, you can always look like a rock star. Okay, we'll come back to that. Let's see if we can find another example, because I know you're dying to see another example. What you're going to be on the lookout for is a breach of the significant support and resistance area followed by a pullback. And the pullback will tell you the degree of risk. So once again, if you want to do a measured move, your measured move will be from here to here. That's going to be your profit. If you're going to do the breakout, that's 1. That's 2. All right, let's see how this plays out now. And remember, the whole idea behind this is that when a market breaches a significant support or resistance area, there's going to be 2 moves in the direction of the breakout. That's the whole idea behind it. Okay, there, we're coming up on the breakout now. That's the zone. So we've just breached. Okay, so we've hit our measured move as a target. How could you use that? Well, we did have a rule of 3 signal right here on the eagle. We would have had comparable signals on the other tools. But here's our rule of 3 signal. So you could be short from down here and you could be out up here, which I bet if I measured it out is probably pretty darn close to your eagle target anyway. But let's see how it does relative to the bigger target. Oh, look at that. Hit the measured move, gave a bit of a pushback. Oh, okay. It didn't follow through. So in this scenario, you didn't quite get the 1-to-1 on the trade. In fact, the market kind of unwound after that. To be fair, it is the overnight session, so that's can be a little bit thin. Let's find something here during the day. Okay, here, how about How about this? We'll follow that area right there. Okay, this is a bit of a judgment call now. Do we wait for the breakout or do we consider this the breakout? I tend to be a little bit, erring on the side of caution. So once again, let's do the measured move. The notion is that the market will repeat the move that it just made. So there's the measured move. And I'm going to call it a breakout, and this is the risk amount now. So that's one. Can I paste? I can copy. Where can I paste it? Oh, what good is that? Okay, and that will be 2. All right, so we have our 2 to 1 risk reward, and we have our measured move. Let's see how it plays out. Notice, even if you didn't treat this as the breakout, you have a little risk reward here now, right? So now you can use that as your risk reward. Pardon me. Excuse me here a moment. Sorry about that. Look at that. See, they get close to the 2 to 1. Traders saw this then as the breakout attempt, and there's the risk. But look, hit the measured move on the number and just came shy of the 2 to 1. And again, that will be because you don't want to be the last one out. Yeah, all right, Ray. Ray says he's got to go, but he'll see everybody on Monday. Thanks for stopping in, Ray. All right, let's see if we can find another scenario. Oh, I said I was going to do it on the shorter time frame. We'll leave this up for now. I'm still curious to see whether we can get that 3 to 1. Okay, how would this look, say, if we're going to do it on the Raptor? And you should experiment. You should play with this yourself so that you kind of get a handle on it. And we're just going to roll back here at random. Okay, whatever day this is, we're going to, here we go, where it looks like we got lots going on. Okay, so the market opens. We'll call that a significant breakout. That's not much in the way of a risk area, is it? Okay, first let's do the measured move. And then let's do the 2 to 1. There's one. And I'm sure there's an easier way to do this, and I'm sure somebody will tell me. There's 2. Let's see if it plays out. Oop, got it. Well, if I didn't miss, it did play out played out perfectly, as a matter of fact. Both in terms of the measured move. Well, it came up ever so slightly short of the measured move, but it made a very nice 2-to-1, didn't it? All right, let's see if we can find another one. All right, here, let's use this one right here. Pardon me, I'm all congested here this morning. The problem with this sometimes is there's a little bit of subjectivity to it. Did you breach a significant support or resistance zone, or didn't you? Well, in this case, I'm going to say yes, we did. Pardon. And I'm going to be a little bit more conservative. I could call this the measured move if you wanted to be more aggressive. I'm going to be a little bit more conservative. I'm going to call that the measured move. Throw it up there. And this now my risk reward. There's one. And there's two. Okay, let's see how this works out. There, by the way, is our number one signal printing. Oh, just a little bit shy of that 1-to-1 and our first measured move. Kind of holding up at the primary resistance line. Okay, so we got our measured move and we've got our 1-to-1. Let's see if it gets up to the 2-to-1. Oh, look at that. Like magic. Oh. Aspen says the extension F9 gives you your ABCD move. Oh, all right, let's try that. F9. Oh, look at you. Oh, very good. Okay. So there you go. You can use F9 to project where the market will go as well. What I find interesting is how often the measured move coincides with the 2-to-1. Have you noticed that? And you know, the market comes up here again, it flinches just ever so slightly, or sorry, in this case, the measured move coincided with the 1-to-1. I wonder if I did the bigger one, if that coincides with the 2-to-1. Oh, it does too. Look at that. Again, right on the money. And as I mentioned before, you don't want to be the last one out. The market will probably go up here, but you don't want to be the last one out. Pretty cool, huh? So now, next time someone tells you you need to risk 3 times as, or have 3 times as much reward as they do risk, and they set up a trade like this and they say, okay, I'm going to buy here, I'm going to risk this amount, therefore I need to have 3 times that amount at risk, you can chuckle to yourself and know that the person telling you that probably does not trade real money. They're what we refer to as a textbook trader. You know, that whole 3-to-1, 2-to-1 reward to risk ratio works fantastic on paper. You take a piece of paper, you figure out half of your trades are winners, half of your trades are losers. You will make money every single time by taking 3 times as much money as you risk. It's math. Math doesn't lie, but trading is not math. Oh, hey, look at this. $79.95. We recovered all the way 3 times our target. Look at that. Boom goes the dynamite. Yes, sir. What a fantastic rally day today. And now that we've recovered 3 times as much, what do you think is going to happen? Well, I think a lot of the bulls are going to ditch. They're going to say, well, thank you very much. I got my 3 to 1. See you later. All right, we'll look at maybe a couple more examples, and then we will finish off our Friday. And, oh, just out of curiosity, let's see what we're doing here on the daily. The daily, of course, not finished yet, obviously. But look, we're back at 8,000. We're going to make a run at 8,000 today. Volume, how the volume finishes today will be very, very important. If the volume stays light, like I'd say less than 200, 250,000, that breakout will very likely fall flat on its face. Oh, okay. Well, there we go. The other Ray, giving another point of view here. He says he's plotted Elliott waves on his Raptor chart, and we are at the end of move 3. Or we're in the maximum move, wave 3. Yeah, that tends to be the big move on the Elliott. That's where everybody jumps on board. Aspen asks, Eric, have you noticed the correlation of the E-mini moving up and crude oil going down and vice versa? Any thoughts? Yes, that is odd because normally there's a direct correlation between the E-mini and crude oil. Normally, if crude oil goes up, the E-mini goes up, and vice versa. There tends to be an inverse relationship between the E-mini and the bond market. If bonds are going up, the E-mini tends to go down. If the E-mini goes down, bonds will, or sorry, I'm saying the same thing twice. So if bonds if bonds are up, the E-mini is down. If bonds are down, the E-mini is up. I used to, when I was trading the E-mini before the NASDAQ, I used to watch the bond market. And if I saw a breakout, say I saw a breakout higher on the E-mini, if bonds were not, if bonds were holding steady, I would be suspect of the breakout. If bonds were heading lower, I knew the breakout would stick. If bonds were going up when the E-mini broke higher, I was reasonably sure the breakout would not hold. And they say bond traders are the smartest traders in the world. And at 31.25 a tick, you can't afford to be wrong too often. Ray Ray says the extended wave target, pardon me, for wave 3, 79.99 half. Well, that's very precise. I've always admired those traders who can call it to the number. Mr. Gann was renowned for that. I do not share his gift, nor do I feel it necessary to do so. You talk about your rabbit holes. Gann's philosophies and ideas of trading, very do-do-do-do-do. And I'm not knocking Gann's trading. I know a few Gann traders, but you talk about your esoteric trading systems where you're studying astrology charts and figuring out which planets are influencing which markets. And again, I'm not knocking it. The serious Gann traders are always reluctant to talk to you about it, and not because they don't want to share what they know, but because they're afraid you're going to think they're crazy. Pam says, UB, those are the ultra bonds, the ultra T bonds. Says, is a great market to trade. I retired from trading for the last 4 years for other things. Bonds are a great market when I did trade. Yeah, Vince says, aren't they? Referring to the Gann traders, aren't they crazy? Yeah. Ray dipping the toe into the Gann pool, he says, I've heard that Gann said time is more important than volume, I believe. That point was measured on trading days, meaning highs and lows. Yes, and we're not going to get into it today, but he had what he called a square of 9 and then a square of 12. And what he did was with time, he believed that he could forecast. Well, he didn't believe it. He could forecast when the next high or low would occur. Problem with Gann is that he never really told anybody how he did it. Not really. This isn't a Gann tool. I was just curious to see what this was. The Gann tool, the Gann time tool would look like this, where let's say we measured from this low to this swing high. Then it would, according to his square of 9, one would be like that, next one would be like this, and next one would be like so, and on it would go according to the numbers that he had determined would be influential. But like I said, the problem with Gann is that we only have partial information because he never fully disclosed how he did it. And to his credit, the man was amazing. He called market highs and lows sometimes a year in advance of them occurring. So is there something to what he did? Yeah, probably. Do we know how he did it? Nope, absolutely not. Now, there are some very good GAN sites out there. Like I said, if you want to go down the rabbit hole, that is a very deep one. But Adam always used to call it mental masturbation because I guess if you feel you have to keep learning stuff like that in order to make money trading, then be my guest. But I don't think you do. And I think today was a very good example. Yesterday as well. I don't think you have to make trading overly complicated. And I say that with all sincerity. It's not just a, one of these catchphrase cliches we hear all the time. I think the important thing in trading, the most important thing in trading, is to be able to identify trend. Once you can identify trend, the rest becomes a little bit more straightforward. Now, note, I didn't say easy, but if I know the market is up, then I can poise myself and look for buying opportunities. If I know the market is down, vice versa, I can look for shorting opportunities. Yeah, Vince says GAN was probably before algorithmic trading. Well, yes, he was well before algo trading, but I know of a few GAN practitioners who they do pretty well forecasting what the market might do. Now, they're not right all the time. Nobody is. But like I said, it always impresses me how they can call it to the number. Although today we did pretty darn good with our measured moves and just, analyzing risk and saying, okay, if this is the risk amount, then we have to, and we can likely anticipate this much in reward. Yeah, Ray says GAN was trading commodities, though. And yes, he was. He was trading, well, grains primarily, but he did venture into the stock market as well. Not stocks per se, but indices. Yeah, Ray's right. When you use GAN, you have to learn patience. The square of 9, if you okay, here you go, you're on your own. If you want to start digging into GAN, you can do a Google search. This is probably as good a place as any to start. Oh, it popped in the word strategy here, but just search square of 9. You can see what it looks like down here. Oh, it looks like the Indians are big on the square of 9. Oh, we even have GAN calculators. We'll automatically calculate square of 9 for you. Don't blame me though if it gives you a headache. It is, like I said, very esoteric. All right, gang, have yourselves a wonderful weekend. If you're going to continue trading today, I think the market's pretty much topped. We'll probably expect a trading range to develop for the remainder of the session. Maybe even a pullback here to the hard edge, but I think that would be as much as the sellers are going to get out of the buyers today. The buyers taking them to the woodshed. All right, I'll see you Monday, and Ray will be kicking off things for you next week. Have yourselves a nice weekend. I'll talk to you soon. Bye for now.